How you doing? Bill. Just thought I'd turn on a stream and have a check of the market. Great A Music with a $10 super chat. Thanks, dude. Good evening. Happy 4th of July weekend. Thank you for the insight, Rick. Most welcome, man. Thanks for the support there. 4th of July weekend in the USA. Brand new financial year for Australia. I think it's the same for the US. I'm not sure what you guys class as a financial year, whether it's from 1st of July to 30th of June. But brand new financial year in Australia, and I'm going to turn my mic down a little because I think I was going red there. So yeah, I think things are probably going to start getting interesting with Bitcoin. I've noticed that there's somewhat of a pennant formation happening here. I'll draw it out a bit clearer so that you can see. But it seems like we've got something like that happening at the moment. I'll drop the opacity on this a little. Maybe make it something like that, just so you can see what I'm seeing. Something to that description. There's some kind of a bear pennant here. So, I mean, a textbook move outside of this pattern would be this way. I can't see any kind of bull enthusiasm at all. So, yeah, I don't think we're going to start seeing like the start of a brand new bull market or anything like that. I think we're going to see, honestly, some more, potential, if we drop out of this pennant, more capitulation. Capitulation meaning, you basically surrender, you give up. So people holding their long positions, they eventually surrender and just sell at a loss. That's what's meant by capitulation. So, especially you saw the first like real capitulation when we broke out of this box here. This was people just going, screw it, I'm gonna sell it. There's no hope anymore for this bull market that happened months ago. So yeah, the people holding out with their fingers crossed, finally giving up in this drop here. I think we may see another capitulation event if we're to drop out of this bear pennant, which I think is like quite likely. I think we're more likely to drop out this side than to punch up on this side. That's just, the textbook play there. Now, it doesn't mean that if we break down that we're going to, really, really far away prices. Like we could just get a retest of this low that we made here. So that, this pattern could just play out enough to get a bit of action back down here again, and then maybe we recover back to 20 and then sit at 20, just like we played around at 30 for so long. So let's see how that plays out. I think, yeah, exactly, Grade A Music. The capitulation is necessary to basically clear out the market participants that are fighting to keep it alive, basically. If I go back to the daily chart here, there's a trading strategy where you trade out of boxes. So I'll give you an example. When you identify a range, like let's say you're a bull and we've come up here and we go, okay, the market seems to have found resistance for now. and I've identified where that resistance is, and I've identified where the support is in this range. So you basically draw out a box, a rectangle like this. Now the next move, or the next play is, okay, I'm going to take a long position if we leave this range to the top side with a stop loss set somewhere inside the range. You know, you want to have it wide enough to accommodate for any kind of, you know, pullbacks or fake outs. But yeah, essentially that's the strategy. You open along here, you set a stop loss, you know, whatever appetite for risk you have, like whether it's a 5% stop loss below entry or 10%, it just depends on your tolerance for risk. And then, yeah, so in this case, price obviously broke out of the top of this range. So a long position was created. Now, from there, you can see another range was set up here. So if you identify a range, perhaps, you know, that resistance is enough for you to think, okay, maybe I should take profit at this range, this new range. So you take profit. And then you notice that the bottom of the range gets broken. So a new range is formed, a new rectangle with a top and a bottom. And this happens on all time frames, by the way. So this box method is kind of like a nice sort of, I guess, it's kind of like programming. If condition 1 happens, outcome A happens. If condition 2 happens, outcome B. I form that action. You know that kind of logic. So anyway, we fell out of this range. So you know, you may have opened a short even, but you know, if that short would have got stopped out, as evident with this range here, this box. So a box was formed, though you wouldn't know it was a box until you had, you know, basically the candles play out. Okay, we've got our low. Yeah, we've got our local high there. We've got a retest of that low. However, it was higher, so it's a higher low. So that's bullish, a higher low. However, it was a lower high. So that's some kind of pennant forming right there. And at this point, you probably would have established that there is a bull pennant right here too. Something like that. If you enter the pennant from an uptrend, that's a bull pennant. So, you know, you would basically have the analysis, or at least the chart pattern analysis, that is a bull pennant, and you'd be optimistic. I mean, the trend is your friend. You know, we've been in an uptrend through this section. So perhaps instead of taking a short position from this range, you set up for a long if it breaks out of the box, which is exactly what happened here. You know, you can also prepare for a short as well if it broke down below, especially if you get lower than the previous low, because a lower low means a change in trend. And you know, here we've got lower highs as well. So if we did break down, you would know, okay, we've got our lower low. That's confirmation of a downtrend. So the trend is your friend. You trade with the trend. You open a short. Now, you always cover yourself with a stop loss. So if you were taking a short, your stop loss would be here. So if price did rise after dropping out of the box, you would get stopped out. And then perhaps if it broke through the top of the range again, you would take out a new long with a stop loss below you, behind you. And then that sets you up for a run to the next, you know, the next consolidation or run. So yeah, that's basically the box method. So in the current time, if we try to identify a box, we're certainly inside one. It's actually certainly getting squeezed right now, but that's our box that we're in. If we break down through this box, that's an obvious short. You open a short at, you know, 17,300 or something like that, or 17,500 with a stop loss, you know, 2% above your entry. or 5%, whatever your risk for whatever your appetite for risk is, you open a stop to accommodate for that. And then, obviously on the top side, if we were to break out to the top side, maybe you'll open a long here, just above the previous high, because that is a breakout trade. You're basically going long on the breakout of resistance. So our existing resistance is something like just under $23,000. So yeah, if we got above 23,000, it'd be okay to take a long, and then set a stop loss for, like, say 22 or 22 and a half, or depending on where you're comfortable setting a stop loss, basically. And that's the box method. So there was another one here, wasn't there, like that? Or you could even say ignore that wick that came down and just take the majority of the price action, like that. That would have been an amazing example of it working. Taking a short when we broke down below, with quite a lot of strength. We broke down obviously through that. So basically we're waiting for the play of this pennant, this bear pennant. My call would be a push further down. I don't think the volume or energy in the market is there enough to drive it up out of the box. But, stranger things have happened. So let's see the volume. So the sell volume has been increasing. There's more and more people selling. There were quite a few bulls yesterday that tried to push it back up above 20, but it didn't live much. It didn't live for long above 20, and the bears took control again. So that's where we're at. We're inside this triangle, this pennant formation, and textbook says we go down. Doesn't mean we have to. It's just a likely scenario. And considering the trend that we've been on for so long now, I think it's reasonable to suggest that we're going to head down after this pennant formation. But yeah, we'll just have to see how that plays out. I could be wrong, and I'm prepared to be wrong, so no problems there. That blue line there, that's our 2017 all-time high. So I'm going to bring the brightness up a little bit and the opacity just so you can see it better. Make the line thicker. So we're below that. We're basically trading. We're spending quite a fair amount of time below the previous all-time high. It's not terribly that much lower, so you could still argue that we're still trading at 20k right now. There's going to be activity above and below, but for the most part we're trading at about 20k, which was previous all-time high. I still reckon that we're going to get that retest of this low here. If we break that low, then there's going to be some capitulation, some exaggerated moves down as people freak out and get liquidated, that kind of thing. Now, another interesting thing is when you look at the logarithmic view on a longer time frame for Bitcoin. So let me open that up. We'll go to let's say the weekly, and let's go to the Bitstamp chart, which I think is this one. Yes. Okay, so logarithmically speaking, now this idea I saw off another technical analyst on YouTube. They suggested that there is this support line that exists somewhere like this. I think it was from here, perhaps. Anyway, what they were suggesting is that we could get action down to touching that blue line. We may get some wicks through it, but that'd take us down to that same low, that 17,600, 17,500 low again, and see how that's confluence with the bear pennant that I've outlined in the previous chart, this bear pennant here. So confluence on two charts there for at least a retest of 17,600, I think. I guess we'll just have to wait and see how that plays out, but awesome opportunity to accumulate more. I've certainly been accumulating, so that's kind of like the vibe of the market at the moment of crypto. So if we go back to this Binance chart and we go to the weekly, check out the MACD. There's no real sign of a turnaround just yet, especially like with the histogram candles here, the histogram bars. There was a little hint as we had a light red histogram bar just there below my mouse, below where my cursor is there. So that was a potential change in direction, which we should have or might have taken at 30,000. But the bears, basically the resistance was too heavy, and the bulls could not push through that resistance, and we broke down out of that rectangle and created more sell. Basically, the sell pressure was too heavy. So now you can see the MACD lines are quite open up. There's no hint of them curling around just yet on the weekly chart. So let's get a bit more resolution on that. So if we go down to the daily, I'll turn logarithmic off. Let's go down to the daily chart. And you can see this this brief moment of swing on the histogram bars. The volume that caused that was not very big at all. So you can see that the green bars are weakening again. So we've got light green histogram bars, which means that that brief swing of momentum has shifted and we are potentially heading down again. So there will be a time where this sell-off, this bloodshed stops. You know, it has to exhaust at some point. And I think it's reasonable to suggest that around 20k is where, you know, the supply and demand have met like an equilibrium. So when you get that equilibrium, price remains flat. So you don't get any kind of action up or down. It's just there's just a nice even meeting of sells and buys, or buys and sells. So as far as like any kind of divergence, we don't have any at this stage. Everything is confluent. There's no divergence. We've got a low here, a low point, which is, you know, it lines up with the low here being, you know, that was a low, but this is a deeper low. RSI is suggesting that's a low, but this is deeper again, so that's confluent. This low here is a little higher than the previous low, which is confluent here. So there's no divergence going on at the moment. This is all confluent and natural movements. So if we are to drop out of this bear pennant, but the RSI remains fairly high up, like maybe you'll see a bit of activity below, but if you get anything like that where the low is higher than the previous low, but the price's low is lower, that is divergence, and that is a signal that the selling has exhausted, and, you know, the sellers are weakening. So like basically a change in direction is on the cards when you see divergence. That's just one hint of like a reversal anyway. It may not be a full, complete market reversal, but it may be enough to give us a relief rally, which may rally, you know, up to, you know, who knows what price. But we can see that there's like a pretty heavy resistance here, as that was a heavy support zone. We've seen a lot of action off that line. Let's just make it different color so that you can really see it. Make it this color. So support, all this area I would class as support at that level. And then, you know, all of this action here was that support being broken down over time before eventually it broke. So I think that's going to give us a fair bit of resistance when we try to come back up. You know, depending on how powerful the market is pushing up at the time, will sort of dictate how long it takes to break that resistance. You know, we might smash it in one run, like, you know, in a day or less. But it just, yeah, it really depends on the excitement and the euphoria in the market, how many people are jumping into the buys at the time. So, yeah, that's I think that's major resistance ahead. If you look at a Fibonacci retracement from the all-time high down to our current low, the golden pocket for resistance is somewhere around $50,000, which sort of coincides with all this action here, this resistance that we see here, here, and arguably some of it here. That's more of a low end of that. Previously acted as support here and here. So, so Kevin, yes, possible $14,000 for Bitcoin is on the cards. You know, I don't see why not. Like this, there is still a chance for that. So, when Moon, I would say after the whales, after the manipulators are satisfied with the amount that they've accumulated. Now that can take a long time, as we've seen in the past. Bear markets take a while to play out. Like even through that, you could argue that was all accumulation. So they like to take their time when accumulating because they've got a lot to buy. They want to basically manipulate the prices down. They don't want to let it slip up until they're ready to say, like until they say so, until they're ready. And I think that's going to coincide with the halving, the Bitcoin block reward halving, which is forecast to start around 2024. So, all right, let's have a look at some alts. Someone said Dogecoin. Let's have a look at Dogecoin. So, let's go down to the daily. So the cool thing about Doge is that it seems to be holding... Whoop, let me change my tool here. It seems to be holding the support range of this current period here. Let me turn automatic chart off. So this range that we established back in March 2021, last year, is being basically traded inside again. All the action above this range here was like, you know, the Elon Musk hype, that kind of thing. I mean, it was Elon Musk hype that got us into this area too. So, but yeah. I think he started talking about Doge in December. Yeah, right around here, like around Christmas of 2020. That's when he first started tweeting about Doge, maybe some of that as well, I'm not sure. But anyway, this is what sparked the party, the Dogecoin party, all of those Elon Musk tweets, and then the SNL hype and the 420 Doge Day. I think you need a bull market for a Doge Day to work. It doesn't just happen because it's, you know, the 20th of April. April 20, the way you guys like to say it in the US. All right, so yeah, we're back in this range. I'm at this point, unless Bitcoin decides to really capitulate again, I think we're going to be like, we're pretty safe inside this range between 5 cents and 9 cents, which is where all these white lines exist here. So yeah, 420. So there was a little bit of action after 420, I think, which was where my line is here, the 20th of April, Doge Day. We actually had a few consecutive days of selling after Doge Day rather than any kind of exciting action. You can see here. So there was this pump though, which is, I think, was an Elon Musk tweet. But don't quote me on that. Something around the 25th of April. Yeah, he's been quiet lately, but yeah, like as you can see, Bitcoin, doesn't this look like the Bitcoin chart right now? You know how we're in a bear pennant at the moment with Bitcoin? This is what could happen with Bitcoin. Another sell-off event, and then, search for resistance. I mean, sorry, support. Search for support, which could be 17,600 again for Bitcoin. Same as this spot here. But for the most part, like for now, I think, yeah, it might just be a quiet day for today, for the next 24 hours until they figure out where they want to push the price. But yeah, my money's on further sell-off, I think is likely. So, if it breaks down below the 17,600, I'll be buying more. But for now, I'm pretty happy with what I'm holding at the price that I have it at. So I'm just going to sit tight for now. But yeah, I wouldn't mind further downside for the purpose of buying, solely just to buy it, because I know that in the future Bitcoin's going to recover and it's going to come up and make brand new all-time highs eventually. It's just a matter of time, and we've got time on our side for the purpose of accumulating at the moment. So it's nothing really to be scared of. It's just the nature of the market at the moment. Hey, so that's Bitcoin. Bitcoin's still the market dominant crypto. So if I go to the total market cap, you'll see that it obviously looks similar to the Bitcoin chart. It's teasing to come back down and test this low here of $761 billion. Now, does that align with any kind of previous lows? So we're currently at basically this support area that we were sitting at back early 2021 when we first, this is where our all-time high was at the time, and then we came back into this cradle of support. So it's kind of where we're back at again. So all of this action here was the, basically the distribution area of the market. All the smart money would have been selling through these areas, selling what they had accumulated back here in the market over all that time. So we're heading back into a crypto winter, I think, and we're definitely in like an accumulation type phase in the market. So it is the time where the smart money starts buying, and that's what I've been trying to do. I'm trying to do what the smart money does every cycle, and that's buy the lows, buy the dip, buy the bear market basically, and then I'll be prepared for when the next part of the cycle comes, which is likely to be the halving in 2024 roughly. So if it happens earlier, awesome. But if not, I'm happy to be patient. So until then, the alt market will still have tradable, just because we're in an accumulation phase with a bear market, like there's still activity, there's still trades to be made. You can still trade, there's nothing wrong with that. It may not be as easy as when we're in a bull market, but you can still practice and make money during an accumulation phase or bear market. It's harder to do, but just imagine what it's going to be like when a true bull market starts. You're going to have all of this practice from the accumulation or the bear market under your belt. You're going to have all this strategies, you're gonna be able to try out different strategies and test. Just I think the way to do it, maybe even go paper trading just to test things out, or use a small amount of money and see if you can practice growing that. Maybe like see if you can 2x $100 just for fun and just for practice. Because if you develop those skills in the accumulation phase, the bear market, you're going to be one of the more advanced, intermediate advanced traders in the bull market, and you're going to know how to play, the best trades for that. So a lot of like the best part of trading, or the aspect that makes a trader a good trader, is their risk management. So any kind of moves down, you want to cut that before it bleeds. You want to have a reasonable stop loss behind you. Whenever you enter a position, you want a stop loss there so you don't get stuck. Especially if you make a mistake, like if you enter into like the back of some kind of bullish move up, and you FOMO into it and you buy near the top, that's an example of a mistake. And this is why stop losses are definitely a way to prevent dramatic losses, but if you find that you're making too many mistakes in a row, and you're basically getting stopped out of every entry that you're making, I think you're certainly potentially over trading, and you're trading emotionally, like you're chasing the green candles. So, go back and do a bit of research on a strategy for trading, for scalping or swing trading, and learn about what makes a good entry. Like, where should you be entering? It's usually when something's quiet and there's not a lot of like action happening on it at that point in time. So maybe it's come down after a previous rally, and it's in like a take profit zone. So it's pulling back. So you want to buy pullbacks in a bull market. So that's the way to go. Anyway, learning to buy the dip and then selling the rip is the key. A lot of people tend to do it the other way around by mistake, just because their emotions are in control. They buy the tip and sell the dip, through fear, or because they have to, because they're on leverage or something like that. If you're on margin, sometimes you have no choice but to sell at a loss because you face liquidation. So if that's happening a lot too, reduce your leverage. Let's say you're having no luck at 10x, maybe drop it back to 5x. Or if 5x is too severe for you, you're making mistakes, drop it back to 3x or 2x, and just practice with that. And then when you sort of develop your rhythm for trading, maybe that's when you can back yourself more and increase your leverage. But it's always better. I heard someone say not long ago on a video, it's better to increase your position rather than your leverage. So instead of $1,000 at 50x, go $5,000 at 10x, if that makes sense. So your margin, increase your margin basically. Don't increase your leverage. So yeah, that's sort of like my trading advice, I guess, at the moment. Just play around with the ratios, because when you play with when you reduce the leverage, your margin call will be a lot further away. So your liquidation line, you're going to have a lot more room for error, margin for error. So higher margin, lower leverage, not low margin, high leverage. Because yeah, that just basically you're taking on more risk with high leverage. It's that liquidation line is going to be too tight, and you're just going to get bumped out because you know how volatile crypto is. It likes to run up and then right back, snap back down against any potential positions that got opened on the high, on the run up. So yeah, you just have to be careful with your leverage. Let's see. So we've covered the total, we've covered Bitcoin, we've covered Doge. I'm gonna have a look at C. Go top 20. Everything's pretty flat so far. It's only been an hour into the new daily candle. The top 20 is not. And this is an old top 20 list. This is probably looking a lot different now. But I don't know. Let's figure it out. Let's go to market cap. Sorry, dogs are barking at the moment. Shh, 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 shh. Calm down. All right. Let me get a little notepad going as well. So we got 1 is BTC, 2 is ETH, 3 is BNB, 4 is yeah, 5 is XRP, 6 is Solana, Beta, XRP, Solana, Dogecoin, 7th. And I'm ignoring the stable coins because they're not true cryptos, you know. Try and get the top 20 here. So we've got Doge, Dot, Tron, Shiba, surprisingly. AVAX, Avalanche, DeFi, Matic is 12th of the. So what we're basically excluding. See, I'm not sure what the hell that is. Wrapped Bitcoin, that's interesting. I'm gonna ignore it though. Matic, Litecoin. Surprising to see Litecoin doing so well. So I thought it was kind of like, it's kind of stale. Litecoin, it didn't even really do that well in the bull market last year. So FTX token, that's a surprise. FTX, Crow. See, is this is just like a BNB for FTX, I'm guessing. We'll include that, sure. I'm not really familiar with it, but 17, 18, 19, 20. So what else do we have? Good old Chainlink, XLM, Nia. See, this is an interesting top 20. And then Atom. Grade A Music with the super chat. Thanks, Grade A Music, $5. Top 3 coins to hold for the next 3 years. Go. I reckon, as far as safety, I think my top 3 would be Bitcoin. If you're like, oh, you want 10 years? Okay, well, I still think Bitcoin. Ethereum will be interesting, and Solana. Those are my big. I would hold like a fair chunk of those. That's just my opinion. That's what I'm going to be holding into the, and then if you want outside of that, some other interesting alts that might do really well in the next bull market. I reckon Doge might do well. I like Matic. I like what are some others? Doge, Matic, all of those gaming type ones, the DeFi ones as well. Let's see, we've got, yeah, I mean ADA as well. ADA, that'd probably be up here too. Oh yeah, Algorand. Yep. So I think also Mana, just as a wild card, like potential runner in the next bull market. Um, yeah, Algorand, right? Yeah, I mean, that's up there. Um, what were those gaming ones? Let me go back. I mean, there was AXS, there was Sand, there was what else ripped up really good last year? Um, I can't remember. Let me go. Whoops. Let me go to the NFTs. Yeah, we got Sand, AXS, Theta. Yeah, Theta is that. Another good one. But yeah, this list here. I do like this list. I don't know about OMG, Omise Go. Like, that was kind of like a 2017, 2018 type coin. Great A Music with another super chat. Thanks, man. $2. Global recession proof coins. I think a lot of coins are gonna feel the effect of a recession. I think crypto is already. I think you could argue that we're already, at the beginning of a recession anyway. So, and but if you mean like what's going to survive a recession, like what's going to still be around at the back end when we start recovering, and I think especially these four here, these should come out the back end of a recession. I think these will be around in the next bull cycle. Bitcoin, Ethereum, Solana, ADA. These are a bit less of for me, a less of a guarantee. There is no guarantees, but if we're talking about likelihood, these are just a little less chance. But there's still a strong chance. But yeah, these are like what you would call the blue chips. The things that you are probably going to be around in the next cycle. Yeah, Gala's really cool. See, we're talking about something that's 2.5 years away. Things can change in crypto. Like, things change quite quickly. We've seen examples of that. So this list could change. Probably not these four. I don't think those will change that much, but these could certainly change. Though Doge has like a proven history of doing well outside of bear markets, it's come for the ride every time into the bull market. So maybe I'll exclude. Doge is like a wild card for me. It's sort of like its own animal. Fancy that, it being a Doge and a dog. But yeah, I think if Doge is going to do well, you'll probably see that Sheeb, just because it's like it's like the thunder stealer of Doge, as we know. Basically a complete rip of Dogecoin, like with the whole Shiba Inu dog. Yeah, it's like a carbon copy sort of thing. Anyway, I think that's going to go along for the ride in the bull market, just for like those meme coins, like those pump just for the sake of it type coins. I think that's what I feel like Shiba is. But anyway, a lot of people call it a shit coin, and I understand that. But hey, if you can make money on it, like, it's not shit to me. So, just don't invest your life savings into it, but don't back it to the grave. But yeah, trade it if it's going to do well. If there's going to be a time where it has, a really good solid week of activity in the next bull cycle, why not get in on that? But I wouldn't be an investor. I wouldn't invest my energy into Shiba long term. I would be backing these guys long term because they're the blue chips. It's just safer. It might not be as amazing with performance, like as in percentage growth, because they're already up so high, but I just think they're more of a safe bet. These are a bit riskier. So, there's probably an order in which you can like arrange them for how risky they are to back, but usually it's the higher risk, the higher the return. Usually, in some cases, like the real risky coins, they go up like 6,000% in a bull market from bottom to top, and you just never saw it coming because it's just it just works that way. And the reason is because they've got such little volume in them that there's no one holding the coin to begin with to resist the buy pressure. And that's why they rip up so high, because there's nothing on the book to stop it. So you have to be careful in that sense, because just as quick as they go up with no resistance, they fall just as hard with no support. Because no one's interested in putting millions or billions of dollars into something that has no future or no community, like no strong, blue chip type backing like Bitcoin, Ethereum, Solana, ADA. So yeah, that's kind of the nature of the low cap, like the shit coins, exactly. DC woodworking. Yeah. Yep, they can certainly rip, and that's because of their low market cap and their low volume. The old pump and dump, the people that jump on that kind of action, they do it on the random altcoins, like the ones that just come out of the woodwork, like during a bull market. Shiba, I feel, is like that. Shiba came out of nowhere, like all of a sudden, oh, there's this Shiba project. And it was like, I guarantee you, it was only made for the sake of riding on the coattails of Doge and the hype behind Dogecoin. Like it exploited the excitement behind Doge. It's plain. That's how I see it, plain and simple. It's very strange that they would name their project after the dog that represents Doge, a Shiba Inu, right? Like, anyway, it's my rant about Shiba. um, yeah, interesting top 20 if you exclude the random, like, I don't know what the hell that thing was. See, I'm not much of a fundamentalist when it comes to crypto, unless you're talking about the age old blue chip type cryptos like Bitcoin and Ethereum, that kind of thing. But oh, I forgot to mention BNB. BNB is probably up here as well, I would say. If you see a future for Binance, BNB does very well in a bull market. That's because Binance, the exchange, trades the largest amount of crypto by a factor of 7 compared to the second largest. So it the trillions of dollars of volume that it sees per year means BNB is gonna be a part of the action in the next bull cycle, I think. Unless Binance gets cancelled or like torn apart by some kind of regulation, I think BNB is gonna be a pretty strong performer as well. Um, if there's a Coinbase coin that comes out, maybe maybe that'll do well as well. But they don't have a coin, I don't think, a native coin like a BNB equivalent. Anyway, I think I'm going to wrap it up there for today. Thanks for tuning in, and thanks so much, Great A Music, for the support with the super chats there. Appreciate that. Um, I look forward to catching you in the next stream, and take care for now, and play safe in the markets. Be careful of leverage trading. And all right, I'll catch you next time. Cheers, guys. Bye.